Welcome to our channel. In today's video, we will delve into a hot topic in the world of investments: Bitcoin. Since its creation in 2009, Bitcoin has experienced incredible growth, with its price skyrocketing from $0.01 to thousands of dollars per coin. But as we look towards 2024, is Bitcoin still a good investment? Join us as we explore 10 compelling reasons why Bitcoin might be worth your consideration. On Bitcoin's immutable rules. One of Bitcoin's most attractive features is its immutable rules. Unlike traditional currencies that can be printed in unlimited quantities by governments, Bitcoin has a fixed supply cap of 21 million coins. This cap is a permanent rule that cannot be changed, ensuring that Bitcoin remains scarce and potentially more valuable over time. In contrast, fiat currencies like the US dollar are subject to inflationary pressures because governments can and do print more money. This process, known as quantitative easing, often devalues the currency over time. Bitcoin's fixed supply provides a hedge against such inflation. 2. Bitcoin's scarcity. There will only ever be 21 million Bitcoins in existence. If this supply were distributed evenly across the global population, each person would only have about 0.23 BTC. Owning more than this fraction means you hold more than what most people can ever possess, adding a significant scarcity value to your investment. Unlike gold, whose total supply remains uncertain and could increase if new deposits are found, Bitcoin's supply is fixed and predictable. This predictability makes it an attractive asset for those looking to diversify their investment portfolios. 3. Bitcoin's transparency. Transparency is another critical reason to consider Bitcoin. Every transaction made with Bitcoin is recorded on a public ledger known as the blockchain. This level of transparency is unparalleled in the financial world. Traditional financial systems, such as those managed by central banks, often operate with a lack of transparency. For instance, the Federal Reserve can print money without public oversight, potentially leading to economic instability. Bitcoin's blockchain ensures that every transaction is visible and verifiable, reducing the risk of manipulation and fraud. 4. Bitcoin is uncensorable. Bitcoin's decentralized nature means it cannot be controlled by any single entity. In many countries, capital controls restrict how much money individuals can move in and out of the country. For example, in China, buying foreign currency or transferring money abroad is heavily regulated. Bitcoin, being decentralized, cannot be censored. This makes it a valuable tool for individuals in countries with strict financial regulations, as it allows them to store and transfer value without government interference. 5. Low transaction fees. When it comes to transaction fees, Bitcoin often offers a more cost-effective solution compared to traditional banking. International payments through banks can incur hefty fees and take several days to process. In contrast, Bitcoin transactions are typically faster and cheaper. For instance, while transferring money internationally through a bank might cost you 35 to 40 files, Bitcoin transaction fees are usually much lower, making it an attractive option for those who need to send money across borders regularly. 6. Positive regulatory developments. The regulatory environment around Bitcoin has evolved positively over the years. In the early days, Bitcoin operated in a regulatory gray area, but today many countries are adopting frameworks to integrate Bitcoin into their financial systems. The SEC's framework for digital asset classification is one such example. These regulatory advancements help legitimize Bitcoin and encourage its adoption, making it a safer investment than it was a decade ago. 7. Profit potential. Bitcoin has experienced a tremendous increase in value since its inception. Despite its volatility, the overall trend has been upward. Historical data shows that even those who bought Bitcoin during its peak prices in the past are still in profit if they held on to their investment. This long-term growth potential makes Bitcoin an attractive option for investors looking to diversify their portfolios and seek substantial returns. A $50 investment in 2009 would have netted you $100 million at Bitcoin's peak in 2017. 8. Philosophical and ethical appeal. For some investors, the question, should I buy Bitcoin, is less about the price action and more about the ethos behind Bitcoin. Bitcoin represents financial liberty, decentralization, and transparency. It was created as a response to the financial crisis of 2008, where big banks were bailed out using taxpayer money. Bitcoin provides an alternative to this centralized system, giving power back to individuals. Its decentralized nature means no single entity can control it, making it a symbol of financial freedom. 9. Bitcoin as digital gold. Everyone loves gold jewelry, but is gold the best investment you can make in today's digital world? President Nixon dropped the gold standard in the 1970s, making the US dollar float. Granted, it held strong, but that doesn't mean gold will. We're living in a digital world. Bitcoin represents a new financial era, digital scarcity. A gold bar weighs around 25.7 pounds, but Bitcoin is weightless and can be bought, sold, and transferred as easily as a swipe or two of your fingers. Bitcoin solves these digital problems and still retains good money qualities that gold doesn't. 10. Bitcoin as a new asset class. If Bitcoin is truly positioned to disrupt gold, perhaps even to replace it as a store of value, it is also a new asset class. This is what Chris Berniski, blockchain analyst at RK Investment Management and co-author of the paper, Bitcoin, Ringing the Bell for a New Asset Class, says, if an investor who holds bonds and equities swapped a percentage of their prior holdings into Bitcoin because of Bitcoin's low correlation and superior absolute performance, they could have decreased the volatility of the portfolio while simultaneously increasing absolute returns. This diversification can be especially beneficial in times of economic uncertainty, as Bitcoin often behaves differently from traditional financial assets. As we've explored in this video, there are numerous compelling reasons to consider investing in Bitcoin in 2024. From its fixed supply and transparency to its decentralization and low transaction fees, Bitcoin offers unique advantages that differentiate it from traditional financial assets. Positive regulatory developments, historical profit potential, and its philosophical and ethical appeal further enhance Bitcoin's attractiveness as an investment. Bitcoin's emergence as a new asset class and its potential to serve as digital gold underscore its significance in the modern financial landscape. While Bitcoin's volatility presents risks, its long-term growth potential and diversification benefits make it an appealing option for investors seeking to diversify their portfolios and explore new opportunities in the digital economy. As always, it's important to conduct thorough research and consider your risk tolerance before making any investment decisions. Bitcoin's innovative and disruptive nature presents both opportunities and challenges, making it a dynamic and exciting asset to watch in the years to come. Thank you for watching, and we hope this video has provided you with valuable insights into why Bitcoin may be a good investment in 2024. Don't forget to like, subscribe, and hit the notification bell to stay updated with our latest content.